I'm Charlotte McLeod with investingnews.com, and here today with me is Nolan Watson, President and CEO of Sandstorm Gold. Thank you so much for being here. Great to have you.
Oh, thanks for having me. Appreciate it.
Really, really good to be speaking with you. I think our audience will probably be pretty familiar with you and with Sandstorm, but just since it's our first time speaking, I thought we could start with a brief introduction to you, your background in the mining industry, and your work now at Sandstorm.
Yeah, well, my background, I've been in mining my entire career. Started, I want to say, 23 years ago as a young accountant finance guy, auditing companies like Ivanhoe Mines and traveling the world to Mongolia and Myanmar and auditing those mines like Oyu Tolgoi and things like that. I did a CPA, a CFA, and as soon as I qualified, I started working at a company called Wheat River Minerals, which very quickly became a company called Gold Corp. And I was there on the ground floor as that company grew up. Eventually, it sold itself off to Newmont. But in the middle of that, they started up this company called Silver Wheaton. And I was the first employee at Silver Wheaton. And the idea behind creating Silver Wheaton was to create like a royalty company, but more chunky streams and royalties on mines around the world. And we built that company. I was their chief financial officer in my 20s. Actually, I think I still hold the world record for being the youngest chief financial officer ever of any multi-billion-dollar New York Stock Exchange listed company. And so I did that through my 20s. We grew that to about a $5 billion company. And then I left and I started up Sandstorm Gold. And we've been building Sandstorm ever since. Silver Wheaton has turned into one of the world's largest precious metal companies called the Wheaton Precious Metals. And but now at Sandstorm, we've been growing it for years. We're New York Stock Exchange listed. We're about a $1.9 billion market cap company, and we do effectively the same thing, focused the vast majority of what we do on gold. With a little bit of silver, a little bit of copper, but mostly gold.
Okay, quite a background with a lot of familiar names in there. So thank you for going into that. We're definitely going to get into details of what the company has going on, but I thought we could start by taking a look at what's going on in the gold market right now, because that's a very exciting, hot topic for a lot of people. So maybe you could give me your take on where we're at right now in the cycle for gold.
Yeah, gold. If you would have asked me what I thought about gold when I started in my career versus what I think about gold now, it has changed dramatically. I think when I started in my career, I didn't really understand gold. You know, I knew that it was valuable. I read the Bible a number of times. I know gold's referenced in the Bible. I knew that it had something related to do with money. Jewelry, didn't value it that much. I think when I got my first job offer, they said, we're going to give you stock options in the company. And I said, well, I don't really think those are worth anything because gold has already gone from $280 an ounce to $330 an ounce. So its run is over. and boy, was I wrong. But I do consider myself an intellectual person. Valedictorian of just about every institution I've ever been in. And I think deeply and thoughtfully about things. And as I've gotten older and wiser and have been in the gold industry in my career, I have understood it from multiple angles in ways that I think even regular people don't, and even veterans in the industry sometimes don't. And I believe that gold, not only has it been a fundamental part of human society and human monetary systems since the existence of humans, it took a brief pause over the last 60 years, and it has come back now. And it is going to be and will be in the future the backbone of the world's financial system. And so I sit now on the board of the World's Gold Council. I'm actually chair of the audit committee of the World Gold Council, and I sit on the Gold 247 committee, and I sit on the advisory committee of the World Gold Council. And although I can't talk about all the things that we're doing publicly, what I will say is some of the things that we are building and putting in place now excite me massively for the role that gold will have in the world. So when you ask the question, where are we in the cycle? I think that the cycle has been reset up. and that countries like China and India and the rest of the world now know that the US dollar, its days not are numbered, but its days as the world's dominant financial system are dissipating and will continue to dissipate and will continue to erode, and that gold is taking its place. And we're trying to create the legal infrastructure for that around the world in all of the countries. And I'm pretty excited about what I see. So gold prices has gone higher. I think it's going to stay higher. I think it's going to keep going higher.
Yeah, very fascinating to hear how your perspective has changed over the years. And I know you talked a little bit about some of the elements that are driving the gold price now, but just to add on a little bit, anything else you would say about key gold price drivers that you're keeping an eye on at the moment?
Yeah, whenever you think about price drivers, you have to think about time horizons. So I'm always reluctant to say what's going to happen in the next 2 years because anything can happen in the next 2 years. And, you get a liquidity crisis. You get Donald Trump keeps doing what he's doing, and who knows what's going to happen to world financial systems in the short term. And that can cause unexpected price fluctuations. But in the long term, the fundamental driver of gold is that there is an increasing population in the world. There is increasing wealth per person in the world, and there is a very limited number of gold, and it is going to be and is starting to be the financial backbone of the world already. I don't have time to go into it on this, but I know a lot of people think about Bitcoin and those types of things as alternatives. But one day I plan on giving a speech on an intellectual takedown on the technology limitations of Bitcoin once quantum computers come into effect and why they'll be worthless. And an asset that is backed by nothing in a quantum computer world is worth nothing. But an asset backed by gold is still worth gold. And so gold is going to be the thing, I think, that outside of the US dollar that people gravitate towards. And so we're at Sandstorm, we're trying to buy as much gold in the ground of other people's mines as possible, because that's what we do.
Yeah. I would love to someday hear more on the whole Bitcoin angle there because that's very interesting. But we'll stick with gold today for sure. So very strong outlook for gold, clearly, as you've been saying. I know that though, when people look at the gold stocks, there is still some disappointment that we haven't seen a more broad-based breakout there. So of course, some companies are moving, especially the larger companies. But what would you say about that situation? Because I know a lot of people are curious about this disconnect that seems to still persist.
Well, it's funny you asked that. I literally had a call with one of my best friends about an hour ago, and he's like, "Gold's almost at $3,000." He's like, "Do you think it still makes sense to buy gold companies?" And he's not at all in the gold industry. He doesn't think about gold. He invests in other things. But I said, "Would you believe me if I told you that if you assume that gold was going to drop from $3,000 an ounce to $1,700 an ounce, that the present value of future discounted cash flows of what Sandstorm is worth is still higher than what our share price is today?" And he's like, "What?" Like, yes, the world is pricing in the assumption of a crash in the gold price. And I think therein lies the opportunity, which is if the gold price is, you don't even have to convince yourself that it's reset itself to 3,000. If you just convince yourself that it's reset itself to $2,200, there's a number of gold companies, Sandstorm included, that are worth way more than what they're trading at today.
That's really interesting to hear the numbers put out like that. And one of the things I wanted to ask on the note of gold stocks is I hear a lot that generalists just aren't interested in gold stocks right now. But I also know when people are coming into the gold sector, a royalty company might be among the first things that they're told to take a look at because it's less risky. So do you find yourself seeing that happen? And do you find yourself doing more education to people who are new to the sector? What does that look like for you?
Yeah, so the large generalist investors, the institutional investors really ran away from gold kind of in 2014, 15 onwards and sort of stayed away from it for a very long period of time and haven't had to think about it since. Gold's such a small percentage of the overall benchmarking that they get benchmarked against that they really don't have to think about it unless it really starts outperforming materially and continues to outperform for a period of time. I think we're at that inflection point now. So I'll use an example. There's one of Canada's largest pension plans. I won't name them by name, but one of Canada's largest pension plans totally disassembled its gold investing team about 10 years ago, and it had no gold investments. And I was recently at the BMO conference in Florida and met with them, and they've said that they've reassembled an investing team in gold, that they have taken a small 2% position in Sandstorm, and they're building a portfolio now again, and they're trying to figure out what they buy more of, and hopefully including Sandstorm. And so you're starting to see the generalist investors go, okay, we've been out of this for too long. It's time to get back. And I'm hearing that more and more. And being a royalty and streaming company like Sandstorm, we're the first types of companies to see flow from generalist investors because we are the most diversified. The last thing an institutional generalist investor wants to do is get fired because they bought a gold mining stock that only owns one mine, and they're not a technical person and they didn't understand the mine right, and they'll lose a bunch of money. And so it's much safer for a generalist investor to own a royalty company or streaming company because we're diversified. You know, Sandstorm, we've got 240 streams and royalties around the world, 40 which are almost 40 which are producing right now. And so we're very, very diversified. And no generalist investor is going to get fired because they invested in Sandstorm and then something went wrong with one of our mines. And so we're seeing the inflow of those generalist investor dollars now, like we haven't seen them in a long time.
Okay. Good to get your thoughts on that. So royalty and streaming space, this is a first stop for generalists often who are coming into the space. And as we learned from your introduction, it's still a part of the mining industry that's relatively new. So, but there are more companies emerging in the royalty and streaming space. So the other thing I wanted to ask you on that note is how people can take a look at the different royalty and streaming offerings and determine which companies are for them to look at.
Yeah, that's a really tough question to answer. You know, I would say that the amount of royalty and streaming companies ebbs and flows. People's memories are really short. I've been in the industry basically as long as it's existed, and they forget that there were periods of consolidation. You know, there's a period of time where Silver Wheaton bought out a company called Silverstone, and with Royal Gold bought out IRC Royalty, and Franco-Nevada, you know, took out a company called Gold Wheaton that I happen to be on the board of. And so, you know, they see the number of companies grows, and then the industry consolidates. Yet they forget that, you know, companies like Sandstorm have bought companies like Nomad, and we bought companies like Premier Royalties and a company called Gold Royalty, and so on and so forth. So the industry does consolidate itself over time. It's been a little while since there's been a wave of consolidation, but I truly believe we're on the cusp of another wave of consolidation within the big six. You know, there's 6 large streaming royalty companies in the world that matter. I think there's going to be some consolidation in those. Below Sandstorm, so we're the 6th of the big 6. Below Sandstorm, it's kind of a cliff. There's almost nothing below us that is anywhere near $1 billion in size in precious metals. And so you've got much smaller companies like Metalla and Gold Royalty and Elemental and things like that. But they're really, really tiny companies that don't have access to large amounts of debt, and nor should they, because they don't have any material cash flow. And their share prices are trading below their inherent net asset value. So if they raise equity to buy new things, then it's dilutive to their shareholders. So they're kind of stuck. And in terms of a value proposition for investing in them is really, really hard. I mean, if you can't raise equity and you can't borrow money, how do you grow? And I don't know the answer to that. And so I don't see them as great value propositions from an investor perspective.
Well, and interesting to hear that you're seeing perhaps some M&A among those big 6 companies. I don't know if there's anything else you can add there.
No, I would say that all of the CEOs of the big 6, we talk to each other regularly. We know each other. We've been doing this together for a long period of time. I'll just make a general statement about M&A in general, and I think it applies specifically to the royalty space, is that CEOs don't like merging or selling their companies when their share price is low because it makes them look stupid. When gold prices go up and share prices go up, and they can sell their company at a higher price or merge at a higher price, it makes them look smarter, and therefore it increases the probability with which they're willing to make those decisions. So I think in this environment where I think there's still more to run in this gold price environment. I think the equities have a lot of catching up to do. I just am foreseeing a future where those equities do catch up and then people start wanting to transact.
Yeah, I think that's very fair. Of course, everybody wants to look smart when they're doing deals. Okay, so that'll be a space to watch. Let's look over now more closely at Sandstorm. I know the company recently released 2024 results, 2025 guidance. There's really a lot to unpack there. I don't think we have time to go into every detail, but are there any key highlights that you would pull out for people to know about?
I would say that we're very diversified. Last year we had about 72,000 gold equivalent royalty and streaming ounces. This year, 2025, we're expecting about the same. The year after that, about the same. But what's not in those numbers and what you can't see in those numbers is that we've invested an enormous amount of capital in some of the world's highest quality development projects. And so there are several multi-billion-dollar mining companies building multi-billion-dollar assets, some of the top assets being developed in the world that we have streams and royalties on. And so our production, if all I do as CEO is just sit on my hands and be patient, our production, we expect it to more than double over the next 5 years based on contracts that we already have. So one of the questions I get from people is like, well, where are you going to go and buy next? And I kind of have to say is, honestly, I just want to buy back our own shares in the market because we don't need to buy more streams and royalties. Our production is going to more than double over the next 5 years. It'll make us the fourth largest streaming and royalty company in the world once those mines are built. It's mines like Oyu Tolgoi and Hod Maden and Glencore's Mara project and Ivanhoe's Platte Reef project, those types of things. Once those get built and our production is up there, we're just going to have this fire hose of cash coming at us. And so right now we're trading at a discounted value, and we literally are just in the market buying back our own shares every day. I believe the gold price is high and going higher. I believe our production is going to be doubling and our shares are on sale. And so we are putting our money where our mouth is. And we're in the market right now buying 30,000 of our own shares every single day and canceling them every single day.
Okay, yeah, you anticipated my question. Of course, I was going to ask you if you're going to be out there making acquisitions, so we won't go into that. But yeah, I did watch, I think, one of your recent investor presentations where you're kind of explaining how you took on debt to make all these acquisitions, and now the focus is really paying down that debt, doing the share buybacks. Anything else you would add on how that process is playing out?
No, what I would say is 2.5 years ago, we swung really big to buy some of these assets and some of the things that I just talked about. And at the peak, we had $640 million US of debt. It makes some people a little bit nervous, but I'm a very conservative person. We very aggressively paid that debt down very quickly. We've already got it down to $340 million last we reported. And what people forget is, in addition to our portfolio of streams and royalties, we actually have a portfolio of investments in other mining companies' debt and equity. And that is generating us a yield and income that is higher than our cost of the $340 million of debt. And our portfolio investment in other things is about $330 million. So they're about equal, they're about offset. And the income generation here is higher than the debt payment over here. So from a debt perspective, we don't need to pay off our debt anymore. That our portfolio of things that are not streams and royalties covers the cost of that. And as we shrink it over time, and that's our plan, is to shrink our portfolio of investments in other mining companies' debt and equity, we'll just use that to pay off the debt. So from a free cash flow perspective, the cash flow generated by our streams and royalties is all free cash flow. Our EBITDA that our portfolio is generating this year should be over $150 million US this year alone. At today's gold prices, as our production doubles, that number goes closer to $300 million US per year. And we can maintain that for a very long period of time because the mines are high quality mines with long mine lives. And when you think about that, market cap is only $1.8 billion US. If we're can cash flow $300 million a year, you got six times cash flow. I mean, you want to buy Apple stock, you have to pay, I think last time I checked, it was 35 times cash flow. I mean, we're one fifth that. And I think our business is better.
Yeah, I think it helps when you lay out the numbers in that way. It's really important to understand. So the other thing I wanted to ask you about, so I'm just back from PDAC, where of course one of the main topics, as it often is how tough it can be to get financing in the mining sector if you're an exploration or development company. So I wanted to, just as we're starting to finish up here, ask you about the role you see royalty and streaming companies playing in that part of the market.
Yeah, since I've been in this industry, things have changed a lot. I mean, when I first got into it, there were lots of banks willing to lend mining companies money, and including development companies. And there were a lot of small equity shops that were capable of raising real amounts of equity for development companies. A lot of those equity shops have closed and or shadows of their former selves. The amount of equity that can be raised by development companies has just evaporated. I mean, I gave a speech a number of years ago called "Where Did All the Equity Go?" And part of it is the things I've talked about, but part of it is structural changes that have happened in the market where a lot of money has been moved out of actively managed mutual funds into passively managed ETFs. If the money is in a mutual fund, a CEO like me can go to the mutual fund manager and say, "I'm doing an equity raise. I want to raise money for my company. Can you please write a check into this equity financing?" The mutual fund manager can decide yes or no. An ETF cannot. They don't pick up the phone. There's no number to call. They don't write equity checks. They just buy you if your name is on a list in an indice, and they don't if your name is not on that indice. And so there's nobody to call in these pools of capital to raise money. So if you're a mining company and you're trying to develop your project or move it forward and or build a mine, there's nobody to call for a lot of this capital anymore. And so the streaming and royalty space is stepping into that void. We are the people you call when you need to develop an asset.
Yeah, I think that kind of underscores a lot of themes that probably mining companies and investors out there are feeling. So thanks for going into that. I'll put it back to you one more time before I let you go. Any final thoughts you would leave investors with right now?
No. Every investor has their own style, and I'll leave them to it. I would say if there's one thing that I've learned, or one piece of wisdom I've learned in the mining industry, it's that the best way to make money is to arbitrage time, which is the market is so short-sighted and so focused quarter to quarter that really amazing things that aren't going to happen for 5 years are sometimes valued at zero. And you can make really amazing investment returns in this industry if you're willing to be a little bit patient.
Okay, I think that's a very nice note to end on. So thank you for coming on to talk today about gold and about Sandstorm. This is really informative for me.
Oh, thank you.
Of course. And once again, I'm Charlotte McLeod with investingnews.com, and this is Nolan Watson with Sandstorm Gold.
Thank you for watching. If you like this video, make sure you hit the like button and subscribe to our channel. We'd also love to hear your thoughts, so leave us a comment below.